Hello and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha, Darad. Well, the markets lacked any enthusiasm today, a very quiet start, and but in the last 40 minutes or so, we did see markets flip into the positive territory. Coming to the levels front, Sensex was up about 200 points nearly, and Nifty was also reclaimed above that 450 levels. But yes, Sensex up above 450 points from the day's low today, and Nifty also up about 100 points from its day's low levels. If you look at some of the sectoral indices, Nifty IT index that did well with about 0.8%, which is nearly 1% gains that is coming in, given that President Donald Trump's tax bill was passed by the US House and it will be enacting as a law later today as well. If you look at some of the other sectoral indices, oil and gas also did well with about 1% gains that came in. Nifty Realty index definitely snapping its 5-day losing streak up about nearly 0.5% at this point of time. Nifty Auto Index, however, that did not do well, saw a cut of about 0.1%, ended the day flat in the red. Metal Index also did not do well, ended the day with about 0.4% cut that came in for the Metal Index as well. Coming to the broader end of the markets, how did they fare? Small caps, mid caps, both of them eked out very slim gains. Small caps particularly eked out very slim gains, flat in the green. However, mid caps continued to falter and that ended flat in the red today. We had two factors definitely that kept the bulls in check. First, of course, the update we received in the morning about SEBI imposing a market-wide ban on Jane Street, accusing the foreign trading entity of market manipulation and seeing unlawful gains of about 4,800 crore rupees. Other than that, the second factor could be the impasse between US-India trade deal, which continues to be July 9th, that the next week is going to be the deadline for the tariffs, and if the deal is not reached, then there could be 26% reciprocal tariffs for Indian goods which is entering the US. But yes, both the White House and earlier this week US secretaries had said that the deal with India will be reached out soon, so that wouldn't be much of a worry going ahead also. But coming to some of the large cap gainers and losers at this point of time, Bajaj Finance, the top gainer on the Nifty 50, given the fact that it did come out with its first quarter business update, we did see that the loan growth has jumped about 25% on a year-on-year basis, and brokerage such as your Morgan Stanley did share an overweight rating on the counter, and that's why we see the stock doing well with about 2% gains. Dr. Reddy's Lab also doing well with about 1.4% gains. Some of the tech stocks did well today, like I was mentioning earlier. Infosys, Wipro seeing a gain of about nearly 1% or so. HUL and ICICI Bank, they were some of the other gainers on the Nifty 50. On the way down, however, on the flip side, if we look at Trent seeing a cut of about 12% or so, definitely this comes at the back of the tepid first quarter update that the company did come out, and of course some of the brokerages, like for instance your Novama, downgraded the stock and cited the steep valuations in the company as this point of time. If you look at some of the other losers, Tata Steel, Eicher Motors, Tech Mahindra not doing well, 1% cut that is coming in for Tech Mahindra stock. We did see that Macquarie came out with the sell rating on the counter and said that it may be difficult for the company to meet its FY27 goals. So that is why we are seeing a negative sentiment which is playing out on the counter as well. IndusInd Bank also with about a % cut. So far this week already the stock is down about 2%. We did see some brokerages notes earlier in the week, Goldman Sachs, Macquarie, all of them being very conservative on the counter and expecting downside from the current levels or so. But yes, all in all, for this week, we are down with about 1% or so on the Nifty front. From the two consecutive weekly gains that we saw, we have snapped those two weekly gains and we are down this week as well. But going ahead, without much further ado, let me introduce to you our market expert of the show. Joining me is Aamar Singh, Senior Vice President Research at Angelone. Aamar, what do you make of the markets? Today it was very directionless in the start, and then towards the end we can see some some positivity that got kicked in.
The markets post the sharp rally which the markets had witnessed. So clearly it is time for consolidation, and that's what we've been witnessing over the past few days. And also, if you look at Nifty somewhere meeting with strong resistance anywhere between 25,600, 25,700 zone. That's a zone of resistance where the index is meeting with resistance. On the downside, yes, Nifty's got very strong support coming on the 25,200, 25,300 zone. If I look at it from a technical perspective, clearly the short-term trend is up, intermediate-term trend is up, long-term trend is up. So clearly, any pullback is an opportunity to buy. But yes, on the downside, as I said, 25,200, 300 should act as an immediate support. If that is taken out, then yes, we could witness some further correction. But otherwise, it's more of buying on dips. Having said that, if you look at the other benchmark index, that is Bank Nifty, that is very close to its all-time highs. It has because if we look at Nifty, Nifty is still away from its all-time highs, which it had made in the month of September. Still almost 700-800 points from those levels. Whereas Bank Nifty made record highs and is has now corrected marginally from those levels. But I would say that overall Bank Nifty and the financials are expected to do well, and that would bode well for the benchmark indices, both of them.
Okay, okay. Amar, what about the capital market stocks that took a nosedive today, particularly for Nuvama, as it was Jane Street's trading partner? Do you believe much of the negative news got priced in today, or can we have can we have a better Monday, or do you believe there's more downfall which is left to be done yet?
I would say that it appears that the markets have discounted now whatever has happened, or the SEBI, the SEBI means the result which has come out. So that has been discounted. I don't see much of issue there because that's not directly related to any specific companies or group of companies. So I wouldn't read much into it. So as far as the markets are concerned, markets are majorly now, I would say, the quarterly results, they are going to act as triggers. How that plays out internationally, I don't think much of an issue is there right now in terms of geopolitical tensions or crude oil prices, or even for the tariff issue, because that also, to a certain extent, seems to be getting over. It seems to be getting adjusted. So I don't see much of an issue there. And also, if you look at India VIX, that's also within very reasonable levels. So that tells me that investors would be more concerned as to how quarterly results come out rather than other factors, because in India, most of the factors are on the positive side, be it the lowering of inflation, or be it the rate cuts, or be it the credit offtake going forward. So these are positives which are definitely there.
Okay. Amar, how are you assessing the quarterly updates that is coming in from the banking sector? We're seeing mixed trends. Of course, some credit offtake issues is prevalent in the banking sector, but anything that you are finding attractive at this point of time?
So if you look at the banking space, see what has happened was that many of the banks witnessed a very sharp correction, and there was selling pressure in the banking space or in the financials as well. So then what we saw was the the environment changed, and then we had inflation coming off, and then we had RBI going in for rate cuts, and then we had the 50 basis rate cut, and then we had the CRR cut by almost 100 basis points, which is to be implemented from September to November. So that would again increase liquidity in the system. So I think from that perspective, banking is a space definitely likely to perform well. But if you look at, in particular, if I talk about Axis Bank on the large, it's not going anywhere in a hurry. It's more or less consolidation, which is being witnessed there. If I look at some of the private sector banks, so there also we are seeing some consolidation. If I look at ICICI Bank, again we are witnessing some sort of consolidation. IDFC First Bank is one in the banking space which is really very strong. It has moved up significantly. We've seen almost a 30% rally in the stock, and sustaining above the current levels. The stock has a potential of anywhere between 10-15% rally in the short term. If I look at some of the others in the banking space, like for example, Kotak Mahindra Bank, clearly it's in a consolidation zone. Though the trend is positive, but it's in a consolidation zone. And if I look at SBI, again it's in a consolidation zone between 840, 850, and 780 on the downside. So there's not much of a trigger there. But the good part is we don't see much of negative on the charts for most of the banking space. So that's a good part.
Okay, okay. What about the IT space, Aamar? Because from next week onwards, we'll have some IT behemoths which will be revealing their first quarter results. Anything that you're liking from this space, or are you still cautious on the entire counter?
So if we look at IT per se, so I'll start with Coforge. So see, Coforge has been on an uptrend, has been, I would say, from almost 1300, 1200 levels. It's currently 1950. So it's rallied by more than 60, 70%. And that's from April, second week of April. So the stock has rallied. Trend continues to remain strong and positive. Our fresh entry at the current levels wouldn't recommend. If I look at HCL Technologies, again, more or less consolidation there. Infosys has started on an up move, so one can keep a close watch on Infosys. But for Infosys, for any significant move towards 1700, 1750 levels, it needs to sustain over the 1650, 1660 zone. That's a level to watch out for Infosys as far as Infosys is concerned. If I look at some of the other stocks, in that case, I would say persistent. We are seeing some sort of correction, some sort of consolidation. So any pullback in the stock towards 5,700 could be an opportunity for fresh entry. And lastly, I'd like to talk about TCS. It's not going anywhere in a hurry. It's more of a consolidation. Charts also don't point towards anything great happening. So but the stock is good from a trading range perspective. So any pullback towards 3,300 is a good buying opportunity. Upside is somewhere around 3,500, 3,600. So more from a trading range play, this is a good opportunity in TCS.
Okay, all right. That's the view coming in for IT. What about the defense sector? Because that kind of buck trend for the markets today. We did see some defense acquisition council's news of about 1 lakh rupees crore order. Do you believe that there is more steam left in the counter? Most of them did well. BDL, BEL, HAL, all of them did well in today's trading session.
See, defense, I would say, is a sector which really has been, you can say, one of the sunrise sectors since the last 3, 4 years, and will continue to really outshine and outperform. But that will again depend upon the execution capabilities. Because one good thing is that over the recent months or so, we've seen, or the world has seen the demonstration of Indian defense equipment. So in that case, we definitely have an opportunity both on the export side, because if you look at the export quantum that we are doing, we have at least a 20x, 30x potential in terms of export potential, as well as domestic consumption is definitely there. So this is a sector one should ideally look at buying. But what's happened is that the rally has been very sharp in most of the stocks. If I talk about BL, you've seen the stock almost from 240 levels to currently around 425, 430. But so what one can do in defense is that you look at it more from a long-term perspective, and you look at it more from a buying opportunity. Maybe you're adding to some of the defense stocks, a couple of defense stocks on a quarterly basis, rather than just going all out at one go.
That's right. Execution is something that we need to watch out for defense as well. Aamar, what about Avenue Supermarts, V-Mart Retail, all of these counters, because they came out with their Q1 updates, but the street was very disappointed with their business updates because of certain growth slowdown in both of these companies. How do you view both of these counters going ahead? Because so far this year, they have been underperformers.
So if I look at Avenue Supermart, see, Avenue Supermart is clearly trading in a range. So it did rally from almost 4,000 levels towards 4,400, 4,500. So there was a 10% rally, but it seems that on the upside, there's a lot of selling that's coming into Avenue Supermart, anywhere between 4,500, 4,600. So that seems to be the cap for the stock from a short-term to medium-term perspective. On the downside, yes, the stock has got good support around the 4,000 odd levels, 4,000, 4,100 odd levels. So again, this could be a good trading play rather than expecting any significant rally. That's going to happen only if it sustains above the 4,500 level. Then you can expect a 10% to 12% rally in the stock.
All right. Let's talk about one stock in particular, Gabriel India. This week itself, the stock has witnessed staggering returns, about 40% returns given the restructuring move that the company undertook. Any thoughts on the counter, Aamar? What do you think? Is there more upside left going ahead? 40%, quite a staggering set of returns.
This stock has been, anyone who's having this stock would be laughing all the way to the bank. So if we look at the stock, as you rightly said, in the week itself, it's up by almost 42-43%, and the stock is trading towards the 950 odd levels. I see there was a major gap up, and then the stock is in for consolidation. So at current levels, I really wouldn't recommend the entry. And those who are long, they can stay long because the trend is quite strong, or maybe they can look at booking part profit and trading the balance. Trading the balance.
Okay, all right. Let's take another stock in focus. That was your Apollo Hospitals, one of the newsmakers this week. We did see that the company plans to spin off its digital pharmacy business and plans to list it within the span of 21 months itself. The stock did end about 75.50 odd mark, but brokerages have been seeing about 8,200 as a target. What's your target, Aamar, for this particular counter?
Yeah, I would say that Apollo Hospital is definitely quite strong on the charts. So we also have a call on this Apollo Hospital, and yeah, the upside is towards the 8,300, 8,400 levels. So that opportunity is definitely there. And if you look at the stock from a technical perspective, also it's quite strong on the short term, intermediate term trend. Long term also, it has breached its zone of resistance because somewhere earlier, if you look at in November of 2024, that is last year, the stock had made a high of 7,545, and from there it had corrected all the way towards the 6,000 level. Again, it's crossed that level. So sustaining above 7,500, 7,600 is going to be something which is very important. One should keep a close watch on sustaining of the 7,600 mark. The stock is definitely poised for trading higher. So one can look at the stock. On the downside, the stock is very strongly supported around the 7,200 level.
Okay. All right. Just one last question before we let you go, Aamar. Any key catalysts that you're watching out for next week, and of course, your picks that you can that you want to state out.
Yeah, I would say as far as catalysts are concerned, it would be more of any specific with regard to quarterly earnings, and for I would say the large caps that would make more that and make more sense. As far as the stock picks are concerned, pharma is one sector which really has performed well, and also we've seen some good movement there. Aurobindo Pharma is up by almost 6% this week. Today also has been a sharp day for the stock, up by almost 3% and significant volume. So I would say if the stock sustains, currently it's around 1190, 1191 levels, sustaining about 1200 is something which is very important. Able to sustain about 1200 levels, the stock has a potential to rally towards the 1300 odd levels. So this is one stock one can definitely keep a close watch on. As far as strong support for the stock is somewhere around the 1140, below 1140 levels. So that can be where the stop loss could be placed.
All right. All right. With that, we have to let you go, Aamar. But thank you so much for your time, and we hope that we connect with you soon.
Thank you.
Right, with that we've come to an end of this edition of Closing Bell. For next week, we will be watching out for any updates that is coming in from the US-India trade deal. So that is something that we'll be watching out for, and that could, provide a catalyst for the markets going ahead. And of course, we have the corporate earnings season, which will be beginning next week, like Aamar was pointing out, TCS on July of 10th. So we'll be watching out for those developments too. But for now, we have come to an end of this edition of Closing Bell. Thank you for watching, and we'll be back with markets next week.